that Lori has come up with. I'm pretty sure this is her design. Um, and what she did is she chose up color and down color is 105, 105, 105. And then she made all the plots right there. You know, looks like it's clear. So you can look at her settings. You could also, if you really like how this is shaded, you could go over here and go, I like how she did expected volume. I want to use it that way. You can right click and you can say, set that to the default for expected volume. And now when you add expected volume, like if you go to the C chart and load it and set that as the default, next time you add expected volume, expected range, set the default for expected range. Next time you go to a chart and add expected range to an indicator or to a chart, then it'll have those defaults already built in. It'll have that color built in. I personally, we started at 312.5 when it first came out. And we moved over, it's quite a while ago. We did quite a bit of post about it, but 312.60. Because I was comparing like the Alchemy system to the IZSS system, and I found 312.60 actually beat out the Alchemy system like hands down. The 5-minute bars are going to just cause so many extra bars. The 312.60 sort of narrows it out, but still gives you a frame of time. So basically, a bar can't be any longer than 5 minutes, or a bar can't be any longer than 60 minutes. Okay? Or if it moves, in the direction the bar is moving, if it moves 3 ticks, on the 4 tick it'll start a new bar, or if it reverses 12 ticks, it'll start a new bar. So I found that 60 sort of helped smooth out everything a little bit more for me. It almost it brought that smoothness of a diagnostic bar chart in, while still giving me an aspect of time. And I put my 1 hour ranges on there. Well, now the expected ranges line up with my bars, which is nice. So that's an hour of time. That's one thing also I like about expected range is it'll show you time. So that's 1 hour of time. That's the action that took place during 1 hour. So all this took an hour. Just that little bit took an hour. And we got all this. There's a lot more movement during that hour. So 312.60 basically makes it a smoother chart. And I would definitely, I'd say I favor 312.60 over 312.5. And this is a chart also, like I highly, recommend. I just loaded up the template to help you, but I also am big on going in and let's see, you're using our VAD. Right there. Okay. And then we have our modes. So I'm going to say mode B, or E, I mean. We have different versions. We're always coming up with stuff. But the mode E, and then one of the things you can do is, let's see if it does it automatically or not. I don't think it does. So yeah, here's the label. You can just type in VAD E. And then VAD A, so you know which one you're looking at from the mode right here, again at the top. And again, if you wanted to add, MVP to the chart, have that worst case stop. Okay. Then we can add that on and click OK. And so now you're starting to combine. And yeah, it becomes more information. So sometimes that feels like information overload. But it also, it starts putting a lot of things into one place for you, making it a little bit easier. Because sometimes I may not have a I-zone entry. Okay, the arrow doesn't line up, right? That's always frustrating. Like, man, I didn't have the arrow, but it took off. And so I missed out on all this cash. Well, maybe you had a VAD divergence. And you missed out on that. So like right here, basically anywhere you can find a, If you get a bad divergence, I mean, you get a long trade. So you just want it to be obviously in the direction of that trend. But the setting for the trend correction is still 15 because I changed it to 7, but it used to be 7. Yes. 15 is, again, makes it a little less, like usually when you go up in a setting, you're going to make something smoother. And you want that balance of not so smooth that you get no signal, right? But not so sensitive that you get signals every like 5 seconds. And so we found that actually changing it up to 15, it made it a lot better. Let's see here. I would have to open up. I don't have, let's see if we have one. Because of what I had when I rebooted there. I'd have to open up a chart for it. Let's see, here is the C's, and if we go over, yeah, it's like, oh, just go directly into it. Into indicators. So yeah, Lori has it set at 7 for this diagnostic chart. I would probably leave it at Lori's settings. Okay. So I would leave on C's. I would leave it at what Lori has set it at. She is the inventor of C's, and it's worked very well. So on C's, I would leave it as is. Yeah. If I try to tell you to change Lori's settings, I get in trouble. And you know she knows what she's doing. So. All right. Let's see here. Yeah, we're always adding new stuff, and we have new stuff on the order prints. You ought to have order prints in your. Let's see. Really, y'all thought I've been gone. I've really just been like suspended by Lori for misbehaving, and so I just got allowed back in the room. So you know. So it's her fault. It's always her fault. Let's see here. Where are you hiding the order prints template? Yeah, so many templates, and I'm overwhelmed. Let's see here. Most of them are just different colors, though. There is a magnet pricing 10-minute open IO close on there. Template. Caps lock. Oops. I thought we had one up. Yeah, we need to add a template though. I know it's not a system, but it should still have a template. Yet. Yeah, see, I'm away for a little bit. Templates didn't get made. Oh yeah. IZSS way outperforms alchemy. We did a big test on it to see which system worked better. That's why you don't really ever hear me talking about that one. There we go. What are you talking about? What's going over your head? 312.60, not 16. The 60 is referring to the maximum amount of time on a bar. So on a continuum bar, the first one is how many ticks in that direction. So let me bring up a continuum chart. See, the first bar I invented was a diagnostic bar. And that was basically just the bar had to move. So it's sort of like a Renko bar, but more accurate. So it actually pulls every single tick and builds the bar. Like Renko bars, they just group bars together. You know, so you hear about all these different ultimate Renko and hybrid Renko and all this. They just do bar grouping. They may load fast, but they're not accurate. Okay, they're not actually showing you all the true price action, which can be really detrimental in looking backwards on a chart and trying to make conclusions and trading forward. So they're very accurate bars. And when I made them, I was just trading futures and Forex because I wouldn't trade Nadex. Because Nadex, you know, I started Nadex about 5 years ago. And but with Nadex, you know, being daily expirations, you know, it took a little while for it to dawn on me, but, you know, because if you're trading futures and Forex, time doesn't matter. Or, you know, stocks or whatever. Time doesn't matter. But when you have a contract that expires in 5 minutes, or 30 minutes, or 60 minutes, or 2 hours, or, you know, 23 hours, time matters all of a sudden. And I didn't want to go back to purely time-based charts because they're messy, and why just have a bar simply because time passed. Okay? And and so basically I did a hybrid of time and space, hence the word continuum. So when the market moves, you know, if I have a continuum chart up here, when the market moves 3 ticks in the direction of the trend, after it breaks that, it'll start a new bar. If it moves, you know, in this case 12 ticks in the opposite direction of where it opened, it'll start a new bar. And then, or if 60 minutes passes before either one of those things happens, it'll start a new bar. So it basically gave us spatial movement and time all in one. And that's why continuum bars are still my favorite. So now on the 312.60, they're my favorite. But I love the smoothness of diagnostic. I'd say mainly for C's trading and for Apex MVP, Elite MVP. I'll even add Apex, the Apex pattern to this chart right here. So, because you'll get a lot of apexes. So if one of the things you're trying to do is get more, you know, entries and get things lined up, as you learn the other systems, and don't do it all at once because you will overwhelm yourself. Okay, but you can actually have, you know, apex pattern entries, VAT entries, I-zone entries. Okay, you can have C's entries, you know, order prints helping you, you know, confirm entries. So you can put a lot of stuff on there, and you don't just have to wait on that one arrow. And what I want you to learn about this is don't just like be thinking about just the arrow. Be thinking about the why, what's going on, and oh, I see volume. Volume's actually diverging right now. It's getting what happened was volume got really strong, then it got weak, whatever. So if I see volume diverging right there, so like I got down volume, and then I get an up closed bar right there with up volume. On that next one, it confirms it, like this one flips right here. Hey, I have another entry. I happen to also have, some MVP arrows and stuff like that too. So, like MVP is flipping, and I got a, VAD reversal. So, there's a lot of stuff happening on that chart. So just because I don't have an I zone entry or whatever other kind of entry, I thought I added the defects pattern. Apex elite. There we go. I could also have an Apex elite entry pattern as well. So you can have multiple things on one chart, as long as you understand each system by itself. So, and when I get, multiple things confirming, well, that's just all the better, right? So, hey, Apex is long. It may not be an entry for Apex, but Apex is long. VAD's long. MVP's long. I got a VAD divergence now telling me to go long. So right here, I get started. I had to wait for this. Like I like to trade in the direction of VAD E only. That keeps me out of a lot of chop. So I may wait about, like maybe the signal happened there, but I may wait until this flips. That flips. Okay. Oh, and I got some other entry signals. Okay, now I can take this long, and I get an idea of where I'm going to. I'm going up here towards this 1 deviation level, and I should expect things to get really slow and start chopping right around that 1 deviation level. So there's so much to it, and that's one of the reasons why I'm personally not big into Autobots. I mean, it's one of those things like it's a, I'm not saying like I don't have anything like that I use occasionally, but as far as like actually looking at the charts and trading, I mean, you sort of have to look at the chart and trade. You don't want, like, you want to learn how to add before you use a calculator, right? And I mean, so many things go wrong with automation. So we're working on some automation stuff, but we're trying to make sure it's absolutely accurate before we release it out. But it's actually going to be, instead of an Autobot automation, we're going to have like traders, and you can follow traders, things like that. So let's see here. I will have to load it up. Let's check it out. With NASDAQ being out of 1 deviation, I'm betting that we're getting somewhere there. I need to look at gold too, because y'all requested gold. Let me flip YM right now, real quick. Maybe not real quick, but. Come on. So flip YM. Once that loads, we'll go hop on over to gold. So YM. Okay, we don't have a VAD divergence. Our VAD E is short. Just looking at this specific chart, the iZone chart. It's coming off a settlement, which is nice. But all in all, no, I would not go long. I don't see enough telling me to hop in a trade. I don't have an iZone. Well, I guess I do have an iZone. There's one right there. Didn't really fully come down. Didn't fully come down to the iZone. We're right on the top of, is that ICE? add the. Don't think ice is on this template. Hold on. So let's keep adding more here. Power line, that's the low or high of a P. Like the apex pattern will draw a line out. It's at 897 on YM. Doesn't make any sense. Oh. A little slow this morning. Oh, it's that ice on there. I just like to. Yeah, like we're right at the top of ice. And NQ's at a 1 deviation on the way up. You have no divergence, and again, VAT-E is telling you don't go long right now. So there's just so many things telling me like no, like you're hitting a level. The other, and I like to look at the other indices. If I'm trading Nasdaq, I like to have Nasdaq, Dow, ES, TF up. So Nasdaq's the big mover today, of course, being driven by Facebook and Microsoft earnings and stuff coming out here in the next couple of days. But if it's already up at its exhaustion point, the Dow's not going to have a whole lot of extra room. Does that help, Jeffrey? Like do you sort of? I'm trying to. I guess But when I say does that help, I mean like, do you see what I see? What I'm saying? With some of the other stuff I've added on there. Mainly VAT-E being one of my big filters for helping me choose a trade. To go long or short, that's one of the best ones. And then, of course, knowing that Nasdaq's at, 1 dev over here, that's going to cause some hesitation. And I'm at, I'm basically going right into the top level of ice, which is where the majority of volume high was yesterday. Simplest way I can put it. So Dow's hard to trade today. I mean, it had a nice, a couple nice setups potentially, but hard setups today because it's just not as much volume as there was on Nasdaq. One of the things I've learned, if you're looking for what's going to move, like that's one thing I know a lot of traders ask, what's going to move, is I look for what's coming up in the news. So, if and we have our news trading plan, so we actually say, hey, these are the stocks and these are the indices they belong to. So knowing that we have a couple major, stocks coming up, with earnings and all that, and the Nasdaq, I would expect that to move. NQ and YM can follow each other, but look like how YM's really not even moved like half a deviation today, and the Nasdaq's just been up. So there's similarities. This is sort of the same time frame right there. There's similarities, but we even had the Dow going down this morning. If I try to line up like 9:30. So about right there. You can see they're not always in sync. So I'm not saying so much I need to be everything in sync. I'm just saying being aware that one of the indices is at its exhaustion point, that is going to make all the other indices, because they're all made of stocks, it's going to slow down the other ones as well. So the first thing I look at is I look at VAD, because it's the volume accumulating in a trend. So our trend algorithm, so like the one we use to color the bars, is VAT-E. All right. And so this is volume being added up. It's not just like, oh, it's green, 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 green. Some people think it's just a green and red indicator. This is actually the volume rising. You actually see the number rising because more and more volumes are coming in on it as that trend continues. So it's not just green because the trend's up. It's the trend's up and we're adding the volume together. That's why you get big and little bitty marks. Okay. So this tells me like our volume is, we're still in a downtrend as far as this volume trend indicator is concerned. We're still, despite these little arrows, we're still in a downtrend. So, and we've been in one, you know, basically it says since here. That's when it flipped over and said we're in a downtrend. So that's the first thing I'm going to look at. I also will look at that divergence right away. Okay. And one, just because, I mean, sometimes that's the quickest trade that's going to pop up on a chart. I mean, that could be like right, you know, almost like next bar type thing. So you want to be looking at that. Like if we got a green right here, I mean, that would be, it'd be small, but I mean, we have VAD divergence going on. So, I mean, you could have a short entry just off VAD right there. So I'll be looking at this, like that just gets me set up real quick. That gives me a quick possible trade to look at. I'm going to look at my levels. You know, where's my ICE at? Where's my deviations at? Okay, that's huge. So, I mean, I can't say how big that is. That's like so massive. And my one other level is my magnet levels, like I talked about on the 10-minute bars. Doing that gives me that, okay, now I'm ready to take off. You know, so the question by Chris was, if your chart was a dashboard, you know, what would be the anatomy of a trade? Can you go over it? You know, what are the things that you're looking at for a second, third? So as you notice, pretty much everything I just said was I'm looking at volume. Okay, so I'm looking at volume E, volume accumulated distribution E, volume accumulation distribution A. I'm looking at volume ICE. I'm looking at 10-minute volume. So on the 10-minute chart we have over here. And I'm seeing it, you know, is it rising? Is it falling? I just posted a video over on Apex Investing's Facebook page. If you're not following that, make sure you're following that. One of the videos I do inside of Boomerang, but it's applicable to all markets. And it talks about how to look at volume and read volume, just the basic volume right here. So magnet volume, you know, the decline or acceleration of volume. So volume is the first thing I look at. Like I'm looking at vertical volume, horizontal volume, you know, vertical being up and down, horizontal, you know, like ICE, and you know, even order prints. So, you know, once your order prints are up and running, or if you leave them running, you know, ready type thing, then you have that going for you. And then I'm going to look at my levels. So where are we at? And then I'm going to step back for a second. I'm going to go, okay, if I go long, what would I need to go long? If I'm going to go short, what would I need to go short? I'm going to ask myself that question. So after I look at volume and levels, I'm going to step back and go, okay, what would it take for a long signal? What would it take for a short signal? All right. And then the fourth question, probably one of the most important questions I'll ask myself in trading, and this is one of the biggest things that separates a profitable trader from a non-profitable trader, is once I do take a trade, okay, or even before I take a trade, I ask myself, if I would have got in, you know, here, or like anywhere on the chart, if I would have went short here or long here, where would I set my stops? Or where would I set my take profits? Or where would I get in if I was a breakout trader? I want to step back and I want to use myself, because you know what? Me and you and every other trader are the same. We're all human, and our instincts are very, very similar to trade. If you just look at the bars, just the price action, okay? I'm not talking about all the analysis and all the indicators, okay? But just the bars. So where would I put my order if I had done this? So, you know, if I had bought here and it moved up and I was still in the trade, and it pulled back down and it moved back up, where do you think you would have put your stop? Like, where do you think you have your stop right now? Let's say you went long on this trade and it way up here to the eyes, and it pulled down back here, and it's up here, and it's oscillating. Where's your stop going to be? Where do you think you would put a stop? Yeah, right there, just below that low. Happens to also be ice, right? But just below that low. Do you think that a lot of traders would put their stop below that low? Right there, that pullback price. So sort of acting across the board. What do y'all think? Y'all think multiple traders would easily see that as a stop? Okay. So if I was long, then what kind of order would I place right there? Buy or sell to get out. See, Ezra's getting gold stars like left and right now. Okay? A sell. Exactly. Okay, so I should expect there to be some sell orders there, right? Okay. So if I was going to sell, I like to get in. If you want to be a step ahead of the market, you want to get in when other people are getting out. You want to be getting out when other people are getting in. Okay? And this, you just have to look at just a basic chart right here. I mean, it could be an iZone chart still, but, you know, you just look at the chart. And actually, it's probably better on iZone chart. But, again, not looking at any indicators. I'm just looking at the price. So if I get a sell signal, and let's say it breaks through settlement, and I put my order in there, I'm going to be joining in on the selling action. Okay? Right? So I'm going to be joining in right there on the sell action. And all the traders that are getting out of their trades, that are taking their either stop losses or that are taking their profits or whatever, they're going to help the trade accelerate, and it's going to go a lot faster. When it breaks that price, you know, if it breaks that price, the market's going to move pretty fast. Does that make sense why it would move fast? Because there's a lot of sell orders there. Does that make sense? Now, some people have bad habits, right? Or they're breakout traders, and they're trying to make, you know, $10,000 today, and they're going to put their stop right there. What do you think? You think that's pretty possible? It's the low of the day, by the way. You think there's going to be some breakout traders trying to go short there? And do you think there's going to be some people who like are going to just say, okay, I got to get out right there, like maximum pain threshold? Okay, so let's say that right now we see, you know, accumulation happening by a hedge fund, which is usually what oscillation is. So they've came up and now they're going short, but they're doing it really light. See, volume goes down, sort of sneaky. Bring it down on light volume. Let it come up, bringing it down some more. They're gathering up contracts to go short. They know all they got to do is bust this, and all the other traders are going to hop in on the action, right? But most of these are going to be traders with stop losses, okay? Panic selling. Now, if you gather together, you know, 1,000 contracts or 2,000 or 3,000 contracts, you have to get rid of them, right? Because, I mean, you know, if you ever try, I mean, look on, you know, Nadex. I mean, if I go buy 1,000 contracts, I can only sell, you know, maybe 100 at a time. You know, or if you pull up a DOM, you'll see how thick the, you know, order stuff is. A lot of people don't even think about the DOM. And that's called depth of market. I'll open one up for you. But where do you think, if I was a big fund, you know, if I was a market mover, not a market maker, but a market mover, and I was gathering up shorts in this area, and I need to buy back all those contracts, what level would I want to buy those contracts back at? Where do I think a whole bunch of other traders are going to be hanging out with their trades? So in this case, the low of the day. Now, it doesn't have to be the low of the day. It just happens to be the low of the day, but it's basically the last big pullback, right? So, which is also the low of the day, which makes it even stronger. Okay, it's where, it hadn't went any more short than that. So breakout traders are looking for a breakout of the low. Right, man, if it breaks out, it's going down, 20 points or, whatever, right? And worst case stop loss traders are going to sell it. So you're going to have a lot of sells sitting down there at the low of the day. So where do you think that the big traders are going to, they're going to take their profits there? So when everybody else is, getting out of their trade, or in this case, a lot of them are going to be getting in, because you have a lot of low breakout traders. Okay, because we even have charts that mark the low of the day, right? What might be a good spot to hop out of your trade? If you get a short here, you want to take some profit, you want a nice short, at least part of the profits, okay? Maybe don't take them all, it's your choice. But at least part of the profits if you're trading multiple contracts. Yeah, a few ticks above that swing, exactly. And that didn't take an indicator. And obviously I'm very pro indicators because I think they take a lot of emotion out. And I think they help me see things clearly and they help you all see things through clearly. Okay? But you gotta you hear me talk about the ABC and the 1, 2, 3 of trading. So like ABC being like following your rules, your steps, when that happens or when I zone entry happens or when C's order happens. But the 1, 2, 3 is this whole thing I've been talking about here is just backing up and turning, and pardon me, but turning your brain on, okay? Because sometimes we get so it's like glued to the red and the green on the chart. Turning your brain on and going, if I was a trader that went long, where would I put my stop? If I was a trader that went short, where would I put my stop? If I was a breakout trader, where would I put my entry? Just those, for long and for short. Those 4 questions reveal a world to you about where it's sort of like it's levels within itself. Okay? And that can help you know sort of where to hop in a trade, where like, okay, I should expect this oscillation to continue until we break here. I should expect it to go down. And even though there's no physical line on my chart, that being the low of the day, I should expect what's going to happen is big boys that sold up here and been accumulating, they're going to buy back. Okay? Stop loss traders and breakout traders are going to be selling. So guess what's going to happen with all that buying and selling? What do you think is the net result when a whole bunch of buying and selling happens right here? What do you think happens? Do you think we get a big trend? We get chop, exactly as we get chop. Okay? So I should expect chop. Now that doesn't mean it's not going to keep going, but it's going to be a battle zone, exactly, Chris. And I should expect it to chop around a little bit. So I can either take partial profits, I can hedge. Like I said that on NASDAQ earlier. I'm like, hey, we're at 1 deviation. You may want to hedge off your trade, or take partial profits, one of the two. Some people just choose to exit. It's just easier. They're not sitting there all day. I mean, sometimes you'd be sitting in that chop for 2 or 3 hours. And maybe you end up making, by the end of the day with your trailing stop and everything, you end up making like another $50 or something. It's like, it's easier just to take it, That's why I like trading multiple contracts, by the way. It's because I can take off, one or more of my contracts, half my position, at least, and lock that in and then trail my stop down. And I don't like doing it just on, I'm not a big fan of doing it for like 10 ticks and out. So people like doing that. And there's nothing wrong with that per se, but like I don't do it just because I hit a certain number of ticks. I do it because there's something on the chart that tells me I should use some caution here. So this would be a wise place to put some money in my pocket. And, I still have some more out there, but we can go ahead and trail that down. But I should put some money in my pocket right now. I mean, NASDAQ may go to 2 or 3 deviations today. I don't know. It's pretty, we're a little later in the day, so I'd be a little surprised, but the market surprises me on a constant basis. Who you're talking about with the star seas? Right there. I've had the best trading day ever. I'm not giving my money back. Awesome. Glad you're having a great day, Grant. Does that help y'all? Like, sort of, it's playing chess, not checkers. You're thinking it steps ahead. And the more steps, like a chess master, I don't know, they think like 14 steps ahead or something like that. There's a cool movie about a girl in Africa that became, a chess master. And, not India, Africa. In Africa. I think that's what I said. But she became a chess master, and they basically talked about how many steps ahead she could see. And so just learn, use your own, like I said, you're your own worst enemy, but don't ever lose yourself in becoming a good trader, because you are also your best ally, because you will tell yourself where the market's going to go. The traders who go like, man, every time I get in, I get stopped out. I mean, great. Okay, now let's take that another level, and now stop trading like you're trading, but keep thinking like you're thinking, and start using that to be a step ahead. Because you're getting in where everybody's getting out, you're getting out where everybody's getting in, and you're basically you're getting eaten by the sharks. You want to be a Remora fish, not a shark. Again, if you don't know what I'm talking about, you ought to hop on. The fastest way to this video, at least at the moment. Let's see here. Go over to our page, somewhere on here. Gotta tag it. All these traders knocking it out of the park. Okay, how the market really works. So you have to log in. It's like company or whatever. Okay, well, you may watch this video like a year from now. So if you do, highlight how the market really works and Apex investing. Okay? And that way it'll come up in a search. Like if I go up here, so yeah, it's in a couple different places. So, and then you can watch that video. And I talk about sharkfish and Remora fish, and Peter, he'll tell you, I don't know if he's in the room right now, like this literally was the video that changed his entire trading outlook, his road, to be a successful trader. So, yeah, it definitely grants. Chris says it takes it to a whole new level. This will help you so much. Just learning to step back, look at volume, look at levels. Okay, think about, stop for a second. Go, okay, to go long, what would I need to do? To go short, what would I need to do? Okay, and then the final step before I make trades. Okay, so after I checked out volume and levels, and I got my sort of game plan of what I need for long, and I'm always ready for a long or short. Okay, don't have that opinion. I mean, you can be a deviation and still get a long, and if things are lining up, it doesn't make it a bad trade. Okay, it can still be a great trade. But what needs to happen for me to be really comfortable with that trade? Like on the NASDAQ Seeds chart, there's several long trades going on right now, multiple long trades happening, and there's even one at the deviation line. And I mean, it can still be a great trade. It has a lot going against it being right there. What I'd really like to see is, get like a VAD entry on it. But you get that's the little things at the bottom with the green and the red. then we have a whole tutorial on the VAD system. It's really probably the simplest system we have. And if you add it in with other things, it's fantastic. But and it even works on Forex. We pull the futures volume on Forex to put it on there for you, just like we do with order prints. And nobody else does that for Forex. So again, that fourth level is, okay, if I was long, where would my stop be? If I was short, where would my stop be? If I was a breakout trader, long, where would my entry be? If I was a breakout trader, short, where would my entry be? And noting those levels, that's going to help you know where to take partial profits when you get an entry. That's going to know where to maybe set some stops. Again, because where everybody's getting in, so you want to look at getting out. And where everybody's getting out, that may let you know where, hey, now I'm ready to take that short. Is often where you want to get in. So, and then also in that same question is, do I see any kind of commercial setup happening, like commercial traders, which is usually the easiest way to identify that is just chop. That's them gathering up a position. Okay? So like right here, they're gathering up contracts. So they're actually going short. See how low the volume is? They're piling up on shorts this morning. And then they drop it. Bam. Okay? And look at this level right here. Let's go over and look at it. Right there. Okay, that's the low from when they're gathering it up. And volumes declined. Like they sold really hard. Like you can see where they started selling. So they went long. They started selling. They backed off. They let the rest of the market hop in. And if we back up, we'll be able to find, where that level came from right here. But you can see it coming up, and now you can see them accumulating again. And since they probably unloaded their volume, because you can see right here how they unloaded, like the volume got the spike right there, and they backed off. So now they slow down, they start selling, but they don't want to sell two. If you sell 1,000 contracts at once, what happens? Like you're going to drive the market, you're going to have worse fills. So they do a little bit, they let it oscillate back up. They do a little bit, they let it oscillate back up, and then when they break it out, go down, they got to go, okay, where am I going to get rid of all these contracts? So I know I'm sort of repeating myself, but I'm just trying to drill it in a little bit. And then let's see here. I know we had a request to check out gold. Yeah, we recorded it, and I think I pretty much repeated everything I said at the beginning, so we ought to be good for the first part that wasn't. That's a beautiful chart. From, when I say shock, all I mean, and I don't mean like they're bad, okay? They provide a lot of liquidity. But what I really mean is market mover. It's a large volume trader, like a very large volume trader. Like when they sell or buy, like they can decide, I'm going to push the market down to here. So they can sell it. But ultimately, they got to get out of those positions. And so they accumulate, like say, 1,000 or 100,000 contracts, depending upon what you're trading. They have to know where they can get out, and that's going to be where other traders would have their stops or breakout trades. for entry. That's the simplest way to look at it. So whether they're a commercial trader or an at-home trader with a big account or a hedge fund um, or a commodity pool, I mean, sort of all those go into the item of shark. And you don't want to be in their path. You want to be what I call, the Remora fish, which I learned from, one of my mentors. And I've actually caught Remora fish when I've caught other fish out like deep sea fishing in Alaska. One of our customers owns a fishing charter company out in Alaska, and our family went out there and we caught some fish. We caught Remora fish, and they sort of latch on and they eat the scraps of the sharks or the scraps of whatever. I don't remember, lingcod, I think is what this thing was. It was huge, mean-looking fish, but it tasted really good. And anyways, I'm happy with the scraps. You can live off the scraps. So, yeah, never get in without knowing where to get out. That was one of the first lessons I learned in trading that I was told. Told by a guy who actually sort of got me interested in trading. And he was talking about how he used to be a whitewater rafter and a guide. And he said one of the things you do is, when you're whitewater rafting, you know where you're going to get out before you get your raft in the water. And I actually learned how to trade because somebody said, "Here's your tip. I'll teach you how to trade." And he thought they were cheap. And then one day he decided to call him up, and he taught him how to trade. And because he really enjoyed the trip, so he actually got the biggest tip in the world. But so when you put that raft in the water, if you don't know where you're gonna get out, you're gonna be like, it's not like you could be in the middle of the rapids and just go, "Oh, time to get out now." You got to be looking ahead and thinking, "Where am I going to exit this?" And whitewater rafting, right? You need to have radio, and you need to have somebody there to help pick up the raft. Or you're walking back and dragging a really heavy raft for a long time. So you really got to think ahead. Not just, we get so caught up in the entries, we don't even think about the exits besides, okay, when I get in, I'll just follow this line. We have no concept of what's happening. We're not backing up from the chart and turning off our analysis and then just of all the colors and just turning on our brain and going, what would I do if? Okay, well, that's what everybody else is going to do too, so how can I use that to my advantage? So yeah, gold's looking really nice. It's been looking nice like constantly here. This has been getting short. It's down at 1.5 deviation. It's having a hard time right there. Volume's dropped off a lot. So you can see where when it was driven down, this is pretty steady, and then just a spike in volume, like they're getting rid of their positions. And they spend some time loading it back up, and then the massive short sell-off again. Then the last group bought back their positions. I would say there's probably not, because this was overnight here. This is all the accumulation of the short contracts. Even though it's going up, they're selling. Okay? Right? Because other traders are buying, they're selling. And then boom, shorts. So, and after two big dumps on gold like that, we probably aren't going to see a whole lot more. That's like one take profit, which, by the way, 1 deviation level, right? And then you got some panic exiting, and you have some breakout trading, and then you have the last guys going in there taking all their profits real quick. Boom, 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 boom. So as this is happening, a lot of profits being taken. And now you're back either into being flat or, another accumulation phase. Considering that gold closes at 130, I wouldn't expect a whole lot more out of it. I mean, the 4, but, technically. So when will the indicators work on NT8? We have a lot of them done on NT8. We'll have them done this summer, like completely. So our head programmer is working on them along with Order Prince, or DJ, our other programmer. and they're actually going to be like flying together over here, working with Lori, I believe, for a couple months. She's going to be on them like crazy and get it all done. So they're flying back basically for the summer. He's flying them over here from Australia for the summer to work with DJ and Lori and knock it out. Because we don't just want to release it to release it. We want to release it where it's right, where it's better, where it's faster. So, and she is super detail oriented, so she's not going to let them get away with anything. She's awesome. And by the way, she volunteers all this time. So I don't know if y'all know that, but like she's not employed by Apex. Like she just literally is a trader that, you know, we help teach the trade, and she loves Apex. She loves helping people, and that's why she's always in the room and always doing all the things you see her doing. It's literally all volunteer work. So it's, we can't express our thanks enough. She's a vital part of our trading community. So those of you that can't see this, she's saying that Apex changed her life for the better, so which is pretty awesome. That's what we're about. I think she's helped return that many times to many more traders. Okay, do we have any more questions while I'm here? So now I'm told to go back to YM real quick. Okay, it ought a little faster now that that's in there. NT8, I said this summer. Let's see here, it'll be out. NT8, the cool thing about it is it will use multiple processors, so that's a big advantage of it. Understand, John, that if you're using multiple workspaces, I mean, that's a lot. Sometimes it's easier to have, you know, one chart set up, but it's a lot of memory, and NT7 like drives off one main processor. So one thing you could do is you could actually have a couple virtual workspaces, like Amazon workspaces, or like $50 a month or something, and you could log into those. Just a thought. Yeah, it dropped down. So down, like we said, like don't go long earlier in the session. Somebody asked about down. I said, yeah, I wouldn't go long on this. And glad we didn't. So they gathered up, they sold it. And what happened? This is sort of cool, actually. I like when I do analysis and we get to see it happen, because sometimes it can take hours, right? It broke this level, and we said when it breaks that level, it's going to go pretty fast. So that's 1251. This is 1 minute. Okay, so right here, check this out. We said when it breaks here, it's going to be a bunch of short sellers, right? Or not short, stop losses, and that's where you'd want to, you know, that'd definitely be the place to, you know, be looking at shorts. And you actually had a VAD divergence right there. See, we were short here. We had volume, and I said it'd be really cool if we got a pullback, and then I went short. Remember that? So you got that. So it pulled back a little bit. Then it went long at 1236. Then it went short at 1249. Now we got a short. That says go short right there. That's a VAD short. So again, that's lower volume. Okay, like it's or bigger VAD. Then it changes direction. Smaller VAD. Changes direction, goes in our favor. Okay, so now we got a short. So we go short right here because we're looking at the VAD E. That's the only direction we're looking at. So we get short. And then literally on the next bar, I mean, this is 1249 at 17. This is 1250 104. So, I mean, you're talking a good 2 minutes. So it's not like you couldn't have got in the trade. Okay. So you go short there, 1250 104. How long does it take to get down to where I said all of the traders would have their stops, where the big boys would be taking their profits? Well, right here, 1251.30. So we got 12. So it took 15 seconds. Okay, you had 2 minutes to get in. So I want you to see that. But it took 15 seconds to get down to the level we said it was going to get to. I said, hey, you may want to be taking partial profits or just take profits or, hedge, whatever. It kept going pretty fast. And then it slowed down right here. This big bar slows down. It actually starts pulling back up. It takes it a couple minutes. But right exactly where we said it was going to happen, we're like, this is where they're going to buy back all their contracts that they have been accumulating short here and here. And it's going to bust down here, it's going to fly down, and then they're going to buy all their stuff back. And they did. And you can see as the volume, like rose. So that literally is what we just said. And that's without all the other stuff. It's just what happened was, by seeing this, I'm like, hey, if I get a short, and I get right around here, that's what I'm looking for. Okay, I'm not looking for a long because I want to go with VATI. I'm looking for a short. And what I expect with that short is that, if I enter, say, up here, it breaks below this, I expect it to go down to here pretty quick. And so I'm going to go ahead and put a take profit or partial take profit or have a spread ready to buy back or, whatever. Or, I mean, you could do a binary as well, the exact same way. Okay, you could literally like sell that contract and set a buyback for, say 53 or something. Say if you could sell it for 20 something. And there's a lot of ways you can trade this, but at the end of the day, no matter what you're choosing, it did exactly what we said it would do. But I needed something objective to give me my entry, right? So I used my bad reversal to give me my entry. There was also that one bit right there, that short. That's really what I wanted. So, and I meant to go short, and then boom. I really wish I would have been taking it instead of talking about it, but I should have done both. So does that how I am? Like what we were talking about? We were talking about the VAD short. It sort of brings what I started out with to when I said the most important thing, the fourth thing I look at. So once I'm looking for a VAD short entry, or I'm looking for an I-zone short entry, or whatever entry it is I'm looking for. Now, where do I look at my levels? On C's, I use diagnostic bars. I have up both charts. So I have C's right here. I think it's Grant that says, hey, we got a C's, but I'm not taking it because we're at a deviation. And that looks like that was a smart move. But then we got a C's short. So I use continuum bars on my IZSS, and I add Apex, I add MVP, I add VAT A and VAT E. In fact, let's see here. You go over here. Seven templates. I'll drop this in the room. If you click on that, so if you click on this right here in the room, this will come up. Okay? When I dropped it in there, you got this file right here. File, save document as. Go to your documents, then go to, I just order in there, go down to Ninja Trader 7, and go down to templates, go to chart, and then click save. So again, that's documents, Ninja Trader 7, chart, save. And now you can right click on your chart. Now again, I have the diagnostic 31260. You can say templates, load, then it'll be under, so it'll underscore before it. Darrell IZSS. I'm sure whenever we post this video, we can attach the template with the directions. Tony? And then Lori, if we can maybe throw that template inside of one of the next releases, that would be awesome. Kelly says, can you list your 4 questions back again? 4 steps. First thing I look is at volume. I look at VAD E for trend, VAD A. I'm looking at for potential setup that may be coming up like right now. I'm looking at my ICE levels, which are volume. I'm also looking at my 10-minute magnet levels. Okay, so all which are all volume. So and I'm looking at order print. So it's this volume, 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 volume. Okay, so step 1 is what's going on with the volume and all of those types of volume. Step 2 is my levels. So again, my ICE levels, my deviation levels, my magnet levels that I've drawn. So to sort of see where is the market in relation to those. Does it move to deviation? If I'm trading and I may also, again, to add to that, if I'm trading like, say, YM, I may look at NASDAQ, and it's smart to have at least a 10-minute chart with deviation levels on it of the other indices. Even if you're not trading them, because you don't want to be confused by looking at everything, at least have up like a little 10-minute chart, that has the deviations on it. They could be little squares, like of TF, ES, NQ, and YM. Okay, that'll give you an idea. Because if you see one of those guys out of deviation, that's really going to put some resistance against the market moving further on one of those other stock indices. Because again, they're all trading stocks. So third, I'm going to say, what do I need for a long entry and what do I need for a short entry? I'm not going to say, hey, the market's going up. Where can I hop in? I missed it. What do I need for a long entry? What do I need for a short entry? Okay. Of course, before you take an entry, you're going to also plan your stops. But one of the best ways to plan your entries and your stops is the 4th step, which is, if I was long here, where would I put my stop? If I was short right now, where would I put my stop? If I was a breakout trader, where would I put my entry? And look at several of those stop levels, a couple of those breakout levels. Make mental note of those and go, hey, if it goes below this, it's probably going to go down to here. Even though there's no one in the middle of this chart, it's going to go down to here. And it's going to go fast because all these long traders, especially the ones that got in up here and are still in, and the ones who got in here, that went in and came back up, this is a lot of pain. And this pullback is like, okay. But this right here, they suffered through this. Okay, we've all been there, right? So they're going to have their stops. They're going to move them up here. If they don't have them there already, they're going to get them there. So lots of short stops right there. So again, what can I do to go short? Well, I got a VAD divergence. Cool. Well, I end up going short. Bam. 15 seconds. In, hit profit, out. It doesn't take all day to trade. Again, it does. You don't have to sit here for 8 hours. You just need to back up and use the tools at your disposal. But carpenter doesn't just like pull out their tools and start hammering. They think about what they look at the wood and they picture what they're going to see in it, or they look at the stone and picture what they're going to see in it, and then they start using the tools to sculpture. So make sure you do back up a little bit and look at those essentials. I think Kelly's thinking about it. Article. Yeah. I mean, I got to go ride, so I don't sit here all day, Working with Felicity, rodeo, and roping today, so. Looks like y'all found the volume video for Facebook. And again, if you just search magnet volume in the forum, you'll find a whole section, like 8 videos on volume. I think it's under like style. Just scrolling through. John, another new site you can check out is Forex Factory, but the problem is how they rate things. They'll say high impact and low impact, and I go in and I measure stuff by what kind of impact does it actually have on the market. So like now, not like, it's more of like they're rating the importance of the announcement, not so much how much it'll move. So that'll give you a list of more announcements, but we try to on our website, and it's free, of course, under apexinvest.com. When you log in, you just go under free tools, and the news trading plans right there. Even if you're not a news trader, to be aware of the news that's coming up is very important. So it amazes me how many people aren't aware of the news, the trade. It's like, you trade oil and you didn't know the oil report was coming out? It comes out every Wednesday. Almost the exact, it comes out at the same time every Wednesday, unless there's a holiday on Monday. Then it comes out on Thursday. But we put those things on there. And Kelly, the person who asked that was Chris. And this was his exact quote. Great question, Chris. You already have that Siege template. This is it. So you just load up, go down. This one is Siege stars, but you'll probably have Siege diagnostic bar. Is stars out yet, Lori? I'm probably like breaking the rules here by showing stuff that we're playing with right now. Stars is out. Okay. Yeah. So Siege stars. That's all I have loaded. So you have, if you scroll down,